There are a lot of lenders out there offering personal loans. Trust us, we track them. If you're looking for a personal loan that charges low interest, I'm going to tell you where you can go, what you can do, and what brands are best. At the end of the video, I will tell you how you can get the very best deal that you can get in your current situation. We've spent years in the lending industry and we track dozens of lenders. We want to use that experience to give you the information that you need to make the financial decisions that are best for you. What is the APR of a low interest personal loan? I think it's important to talk about what low interest means. Now, there is low interest and then there's low interest. Lending is extremely individual. If you have a spectacular credit score, a low interest loan will mean something very different than if you have only a fair credit score. Here's a rough idea of the average interest rate for unsecured personal loans based on credit score. Of course, this is an average, which means that a low interest rate would be below these numbers. If you have a credit score in the good range, you can expect a personal loan around 15%, which means that if you can get one at 13%, you're doing pretty well. The poor range is something of a wild card, frankly. A lot of the loans offered to people with poor credit can be much, much higher than 65%. Bad credit loans are a whole different thing, and I'm not going to tackle it right now. That's a whole different video. In this video, I'm going to focus on loans for people with fair to excellent credit. Where can you go to get a low interest personal loan? There are three kinds of companies that offer personal loans with low interest rates: credit unions, banks, and finance companies. Not all credit unions offer personal loans. The ones that do are most likely to charge low interest. The ones we monitor generally offer loans with minimum APRs of 8% and maximum APRs in the low 20s. Credit unions are not-for-profit organizations that are owned by their members. They charge lower rates for their services because their charter demands that they reinvest earnings into improving services for its members. Of course, you need to be a member to use their services. They also often prioritize long-standing relationships. They might also be rather restrictive in who they lend to. Banks can also offer personal loans, but not all of them do. For the ones that do, they often reserve their lowest rates and their highest loan amounts to existing customers. Banks tend to be rather restrictive about who they lend to, so you are probably going to need good to excellent credit to be approved. The primary purpose of many finance companies is to offer personal loans to consumers. Generally, finance companies will have higher interest rates because they have higher costs in customer acquisition and underwriting. This does not mean that their interest rates are always higher, though. They will try to be competitive to attract the best customers, but they will also offer loans to people that banks and credit unions will not. What can you do to get a lower interest rate on a personal loan? Several things play a role in the interest rate the lender will offer you. Your credit history is the biggest factor. Your credit score stands as a proxy for that history, but it also includes things like your debt-to-income ratio, payment history, recent hard inquiries, and utilization. If you need a loan right now, there's not much you can do to change your credit history. Depending on how thick your credit file is, making meaningful changes will take at least several months. But there are some things that you can do right now. If you are struggling to get approved for a loan or the interest rate that you want, you can consider adding a cosigner to your application. A cosigner is someone who agrees to pay off the loan if you fail to. They are really only going to help you if they have a stronger credit profile than you do. If you can get the loan that you need without a cosigner, don't include one. There's no reason to entangle a loved one in the process if you don't need them. Not all lenders will accept a cosigner, though. If you think you might need to use one, you should make sure that they will take one before you begin the loan application process. Credit unions and banks will often offer discounts to people who are customers. They tie their most lucrative discounts to people who have savings or checking accounts with them. These institutions get the benefit of their deposits and the opportunity to sell you other financial services products. Companies will also offer discounts if you sign up for autopay. Autopay lowers the chance that you will be late on a payment or default on your loan. That saves them from losing money in the long run, and they will sometimes share that savings with you in the form of a discount. Some finance companies will offer lower rates to returning customers who have been in good standing. If you have used a company before, you should check to see if they would offer you a lower rate than other companies because you have proven yourself to them. In an ideal world, you would be able to meet your needs with an unsecured loan. I like unsecured loans because running into additional financial trouble won't create a domino effect on your finances. However, if you can't get the loan that you need, one solution is to offer collateral to guarantee the loan. Providing collateral can get you a lower interest rate, a higher loan amount, or both. Of course, the risk of putting up collateral is that you could lose it if you end up having trouble repaying the loan. The most common type of collateral is the title to your motor vehicle. Some institutions will allow you to secure the loan with a savings account or a certificate of deposit. You can also secure your loan with your home, with a home equity line of credit or a home equity loan. Keep in mind that not all lenders have secured loan options. If you can handle a higher monthly payment, you can often lower your interest rate by choosing a shorter term. Lenders often consider longer loan terms to be riskier because there's more time for something to go wrong. You might be able to shave several percentage points off the interest rate of your loan by accepting a term that is a couple years shorter. What lenders offer the lowest interest rates on personal loans? The first list of lenders I'm going to show you have a maximum APR that is below 22%. That means that if they approve you, the APR they will offer you will not exceed 22%. If you look down that column titled State Coverage, you will see that many of these lenders do not operate in all 50 states. M&T Bank has a great low maximum number, but its availability is limited. They are found in 13 states along the eastern seaboard. Truist offers loans in 16 states, 15 in the Eastern Time Zone and Texas. PenFed is a credit union that issues loans in all 50 states. There are no restrictions on becoming a member. Happy Money connects borrowers with credit unions across the country. Navy Federal Credit Union restricts its personal loans to members, and to become a member, you must be connected directly or by family to a branch of the U.S. military. Both Citibank and Axos issue loans nationally. Fifth Third Bank operates in 11 states in the Southeast and Midwest. This next list of lenders all have minimum APRs under 10%, so they have the capacity to offer low rates. But as you can see, they also have maximum APRs that are over 23%. Many of them go all the way up to 36%. That means that these lenders won't guarantee you a low rate, even if they approve you. Compared to the last list, this list includes a lot more finance companies. Their wider range of APRs shows that they are much more focused on being able to lend to a broader range of customers. Every single one of these lenders has a different algorithm for deciding who to approve, for how much, and at what rate. Your credit score is a decent proxy for the quality of your credit history, but lenders look at a lot more than just your credit score. So how can you be sure which lender will give you the best deal? The key is to shop around. You have to make sure that you're getting the best deal that you can in your situation. If you can, we recommend that you get 2 to 3 approvals before you decide which loan to take. Of course, applying to several different lenders can take a fair bit of time. That's why we've tried to make shopping around easy. At the Yukon Project, you can go to our lending marketplace page. You can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers so you can pick the best loan for you. If there are any lenders that we don't have on this list that you think should be, leave a comment below. If you have any experience with any of these lenders, consider sharing your story below so others can learn from you. If you found this information helpful, please like this video and subscribe to our channel. It really helps us out and we appreciate it. Thanks for watching.